Welcome to TradeTheMBI.com. This is John. This report is for the 20th of July. Friday was, well, right in line with our typical script here. We've been looking at cyan under red, which is typically bullish, but we had a short-term steel buyers here falling, which a little bit weak within general rising shakeout. So all things being equal, good to neutral. And that's kind of what we got, good to neutral. It was slightly higher recovery. Now, from an NQ standpoint, a little bit more weakness, and that's simply because it was allowing the S&P to catch up and just been hovering right around the ABM yellow as well as the 76 fighting, but back and forth between it. And you can see we've had that shakeout decline, which is really what precipitated the softness here. But we got a full DOC steel reset, still cyan under red. It's just a matter of a little bit more of an uptick, and this will shoot right back up to the highs again. And from a euro standpoint, of course, it's breaking out as we get more and more word of the U.S. re-shutdowns. That's only going to fuel euro, and they really would like to see this get back up into the 120 range, at least from a U.S. Fed standpoint. I don't think the ECB would particularly care for that, but that's exactly where they're headed with it. It's just a matter of the justifications and trying to recreate the imbalances because more money is moving back to Europe because at least Europe is moving. You have such chaotic start-stop within the U.S. that it's problematic for some investors because they can't move in for restaurants or other things like that. So there's going to be some lag. And this is something we talked about months ago when they instituted these lockdowns and stuff. And of course, you still have the battle with Sweden because they didn't do any lockdown, and they've ended up with low mortality rates as well as a completely functioning economy. Same size population as Michigan, but completely different results because they allowed for the standardized herd immunity. Florida was a pretty good model. Despite what you hear about new cases are irrelevant. What you need to look at are the deaths, as I've mentioned, and those have been declining nationwide in America. And, well, that's a result of what you expect. As your older populations are either protected or have gotten it, you then move to the lower population, which, yes, you're going to get these spikes in cases, but the mortality for those is like almost nominally zero. It's like 0.00, and then pick the number depending on which location you're at and any pre-existing conditions, blah, 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 blah. So, that being said, you can see oil not going anywhere because until you can get a consistency with growth, and that because production can change at any moment. They can turn taps on immediately. But again, gold has to go. The new stimulus is the next real hurdle that everyone's waiting for in the U.S. Will they be able to come to an agreement despite all the differences? And if so, how much money will it be? That really is the benchmark. So in pre-market, we ended up with a short signal coming there. This brief moment with the cyan dip below red, just for a brief moment, but completely rejected it the next bar, and that led to the precipitous breakdown. But we already had the dip below the red line. It satisfied it right here, and then even the positive extremes that had been created. But this dip back here still needed to get filled, and that's exactly what it did. So just took a little bit longer than sometimes you like, but it nonetheless did the same thing, and then it bounced immediately off that. So not a shock from there. And there was just regular bounce action. It was a rather small day when you think about some of the larger volumes. I mean, we can fit it on one screen with a pretty decent width. That's pretty soft, but the range is, again, still incredible. I mean, you're talking, over 20 plus points in these down draws and back plus. So I think from a volatility standpoint, we're still doing okay. It's still less than it has been, but I don't think there's anything to complain about. This market's doing exactly as we expect and behaving very well. Just a matter of continuing to follow that. I don't see any objections because the algorithms are what's running the show, and that's why we're seeing what we see. So until that changes, until the Fed makes a substantial move, things will remain more like they are now. Doesn't mean we're not going to see moves back up and down, but the broader aspect is still to move towards that 4,000 goal. It's just a question of progress within various states and showing a consistency, which we're not getting just yet. As always, though, trade well. We'll talk to you later. I'll put anything relevant on the Skype chat.